Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Firstly, I want to be clear, I am not suggesting this is something you do, but a lot of you asked to hear about it. So I'll tell you about my current option strategies, but they are possibly not what you might expect. I don't analyze charts or study the Greeks. I think if I wanted to summarize my strategy succinctly in one word, it's patience. I thought a few anecdotes might help too, to learn from my experiences in various situations that I've already been through to help you further assess and judge the potential environments. Also, the amount I spend on trading options, at least this day, is so small relative to my holdings, but there are just times when the market goes absolutely insane and decides to crucify Tesla's stock price. Eventually it becomes a no-brainer that Tesla will very likely recover and bounce back. We saw this several times this year already. Although this year I wasn't trading options but accumulating leaps, as I very much wanted to continue to build my position, but I'm just about up fivefold on one of those already, not bad for about 6 months, and all the others were up about 3 or 4 times as well. If I'd used call options with expiry dates out a few months rather than 2 years, then the returns would have been astronomically higher. But at this stage I wasn't interested in short-term gains. I was interested in hedging a low price for as long as I could, until I could afford to exercise these options to add to my position. I was clear about this the whole time too. My leap strategy was not for trading, but buying shares. I know some of you have different strategies for your leaps that work best for you, but this was mine. To me, it is clear Tesla is going to be by far the largest company in the world, and I want to be in it as much as possible. To be honest, I don't even think that much about the money or how much the shares will be worth. I measure my wealth by the number of shares in Tesla I have, not the value of them. I just want to be a part of this company and its missions as much as possible. It has made life so much more exciting with the hope and potential it has. Okay, so how about call options then? I used to trade them relentlessly. I think something like 50 trades in 1 year once. Then I did my tax returns and realised I'd only made something like $10,000 profit from all of it. It's funny how your brain will make you think that you've won a lot more than you have. I guess that's an emotion that casinos are able to profit out of. I thought I'd done much better. So I stepped back a bit after this experience. Previously, I would have just waited for a drop in the stock price and buy an option. Then if it dropped a bit more, I'd buy another, and another if it dropped again. This is dollar cost averaging. I never purchased more than 3 through this process. One time I was in New York, it was actually for 2019 New Year. The market felt a recession was coming. The entire market dipped. I picked up 3 calls with expiry dates of about a month out. It seemed like a bargain. I think the stock price was about $290 pre-split. It shot up to about $330 and I sold them at about the top. It was actually really tough to sell them as I happened to be on a cruise going through the Panama Canal at the time and the internet was not great. It was also really hard to keep up to date with the stock price throughout the whole cruise, and Tesla was only about a $50 billion company back then. So whenever I wanted to know the price, I had to turn on the TV and wait for the Tesla ticker symbol to come up, which didn't come up often due to it being a much smaller company. I also managed to convince a few New York retirees to invest in Tesla too back then on the cruise. I hope they did. Their retirement would have improved if they had. I really was just a walking Tesla salesperson, telling people to invest and buy their cars. I just wanted to see this company succeed along with its missions. Anyway, I managed to eventually sell these options at a good enough profit that it covered the cost of our cruise. And then we landed in Cabo, Mexico. I went to a bar to get some internet. Tesla had crashed. It went from about 330 to 300. Well, I just made over 10K in the last week or so. Rinse and repeat. So I bought a contract. Before my eyes, in minutes, it was down to $290. Buy another, then $280. Buy another. I couldn't believe it. This was another great sale. I get back on my cruise ship and head to LA. It kept crashing. The bleeding didn't stop until the end of May, down to around $180. It was the shorts throwing everything they had at the company at one last desperate attempt to sink it or hurt and delay it as much as possible. It was at this stage I created a message for my future self too. Remember how this feels and be glad you didn't put everything you had into Tesla, so that even if it does go to the moon, you don't regret not buying more. And as we found out, Tesla was close to bankruptcy and even tried to sell to Apple. But I could never see Tesla going to zero. My thought was that if it got too cheap, then Google, Apple, Amazon or someone would just buy it out. But that never happened. So the shorts squashed that spring as much as they could until it finally released and the stock kept running from there. Take this story in mind that anything can happen in the market. There are no guaranteed wins. So I play the odds instead. Rather than just trying to buy low and sell high trading, I took a new perspective. Instead, I aimed for asymmetric investments. This is an investment where the potential return far outweighs the odds of it occurring, hence asymmetric. And rather than just trading regularly up and down, I wait and wait. I wait for it to go down to a level where it looks tempting to buy, and then don't buy. I figure if it looks good to buy now, then it's going to look even better if it drops further. If it bounces back and I didn't buy, sure, I missed out on a quick profit, but as we saw, this strategy didn't work. This happened this year when we saw the stock price at a high of 900, then it dropped into the 800s. Some people bought on that dip, except then it went to the 700s. A lot more people bought on that dip. I didn't buy any shares or options at this stage. Check my previous videos around this time for verification if you like. Then it hit the 600s, and I started buying. As low as this felt, it then went to the 500s. Now, this was obvious. To lock in a price like this in 2 years' time with some leaps, it's absolutely crazy. I'd spent all the available funds when we were in the low 600s, unfortunately, but I wasn't going to miss out on the 500s, so I sold shares to buy leaps. Call options a few months out are hard to time, particularly when it comes to sell. Sometimes it's nice to take 100% return in a few weeks, but if you sell too early, you could have missed 500%. That's a lot to leave on the table. Equally, that 100% return can drop to a 50% loss. This is another reason I'm more into leaps, as you flatten out some of this short-term noise over the long run. Besides, if I'm exercising them, it's of no consequence whether I exercise them when the stock is 10% higher or 10% lower, and the stock price I'm exercising them for is likely still about 1/3 or so the market price might be at the time. But anyway, I think I'm possibly done building my Tesla position for now. The amount I have to spend on the stock is just so much higher than my dollar cost average, it's almost inconsequential. Not that I don't think it's possible to still get a 10x return from here, but in my position, I wouldn't really consider purchasing unless under $1,000, so I'm probably more of the contrarian investor mentality at this stage. If it happens, then I'll buy. If not, then I've got enough. But I still study Tesla over full time. This is valuable knowledge. Not to mention getting to share my ideas with who are possibly some of the most onto it Tesla investors in the community. Therefore, I use said knowledge to play with options. If options trading is your only strategy, then this might not be right for you. My strategy is just to wait until the fruit starts to hang so low, I can't resist picking it. Totally contrarian. If it's that tempting, then I'm taking it. And I was just getting back into it in September. Headlines of another recession coming. These always create dips. Markets expect and anticipate recessions and crashes. There are events that show all the signs and the market gets spooked. Evergrande was the event. The stock dipped to about $724. For some reason, I was waiting for $720 and I was only buying one contract for about 2 or 3 months out. I would have been up about $40,000 profit now. That's a reasonable amount of profit for just over a month and something like a 10x return. But it wasn't just the potential crash that got me excited. It was also the potential Tesla events. We had Q3 coming, deliveries and financials. They were going to be great. Despite being somewhat priced in, there was the shareholder meeting. Anything could be announced in that. There was also the 2 factories potentially opening, which were bound to give a boost. All of these combined looked like the perfect time to be buying options. And boy was I right. I said it would have been about $40,000 profit, but bear in mind, that was if I had held onto them that long. In hindsight, I never know when I actually would have sold. But that's our brains again, being mean to us, torturing us, assuming that any missed opportunity, we would have bought at the bottom and sold at the top. Got to keep emotion out of investing. Also, bear in mind, these times when the stock price dips, it's usually for a good reason. The market is spooked. You have to go against all the negative news and potential FUD you're hearing. This is not easy for most people. When I was showing everyone how I was buying leaps, when we were back in the 500 stock price, there were plenty of people commenting saying it was going to $100 or $200, and we even had Michael Burry going against us. People questioning how someone like me thinks they know better than Burry. You have to ignore all of that, and it's not easy. This wasn't the first time I considered buying options for various events coming up. Back last year we had a similar thing. Tesla had their 4th quarter of consecutive profit. This meant they were finally eligible to be included into the S&P. It could have been announced any month. Well, something like that has to move the stock price. I mean, an enormous amount of Tesla shares needed to be purchased by these index funds. On top of that, what if there was a potential short squeeze, something similar to the Volkswagen squeeze? This was uncharted territories. Anything could happen. All the signs of an asymmetric investment. Not only that, Battery Day wasn't even too far away either. Combined with a shareholder meeting, Tesla were going to announce their dry battery electrodes. A total industry game changer. I didn't have many funds available at the time, as unfortunately I was renovating my new house, which sucked out a lot more funds than I anticipated. Luckily, my father is a very wise man and listens to what I say, and was smart enough to also realize the situation. He bought quite a few options. What happened? Well, it's Tesla. Anything can happen. The stock split was announced. My dad was up about $250,000 at one stage on his options. However, I encouraged him to hold on through to the S&P and Battery Day, which turned out to be wrong advice, and he closed his position with a profit of around $150,000. So sometimes, when the profit is that good, perhaps you should just take it. As patience is now my game with options for contrarian purposes, then I really am only looking at 2 or 3 trades a year, when all the stars look to have aligned, and I would likely hold until at least a 5x return. I actually looked at one the other day. Because of the Hertz deal not being officially finalised, the stock will obviously jump back as the deal is going through 100%, and might be for even more Teslas than we initially heard. But the options are at an annoying price level. A split would have helped the options trading a lot. What potential options events are on the cards next then? Well, like I said, this Q4 will make Q3 look like Q2. I want to do my Q4 forecast, but I'm still waiting on Shanghai numbers for October, although they may already be out by the time this video is launched. So I might get some options on February 2021 for that, not to mention the new factories opening, but probably only if there is a dip first, just to be on the extra safe side, especially when the options are so expensive these days. It was different when they only cost about $1,000 or $2,000 per contract, but after that, I'm possibly expecting the stock price to drop, as long as there are no out-of-the-blue events, like another stock split or compact Tesla unveil. I don't think the market will like how much of a loss the new factories are likely to run at for Q1. I think EPS might be down in Q1 from Q4. Then add into that tons of FUD, it could drop. But it might drop from 1,500 to 1,300 or something. I'm not saying it could drop back into the 3 figures, although it's certainly possible, especially if we run into any issues with production or 4680 batteries. I may even look at buying some puts. This is not the same as shorting the stock and doesn't affect the stock price. I actually only ever bought a put once with Tesla, after the infamous 420 tweet, when the stock price ran too high, and I did pretty well on that one once the SEC stepped up to the plate. But I'm happy to share with you when and why I do purchase any options, and we'll share on Twitter so you can follow me there. It looks like I was right about the leaps, so let's see if we can find any other ways of making 5 to 10 times our money in such a short period of time. Of course, I'm still researching puts for Ford and GM. I want to time them right, as the EV tax credit is likely going to send them to all-time highs. So we'll see. I'm thinking about a diversified insurance portfolio to get me through any potential bad times. Okay, that was quite a lot to say, but thought I would share it all with you. Equally, I would love it if you could all share any of your option stories with us too in the comments. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.